How you doing? My name is Chris Bander, and I just had a minute here to give some tips on those who have come to us looking for final expense coverage or life insurance type planning, so that they're not a burden to their family members upon their passing. So a couple of the tips. I've been doing this business now for, I would say, close to 10 years, and I've been in a lot of homes. I've seen a lot of policies. I've seen just a lot of things happen in this time being in this business, seeing as many people as I have. And generally, when I see people shopping for this insurance, they don't really have a good place to go to, educate them on the different types of policies and why one would want one policy over another. Okay. And so, I kind of call this life insurance 101. And generally most people, regardless of, where they are, in their life, either young or even old and supposedly experienced with looking into this kind of stuff, most of them really don't understand it, So starting off, life insurance 101, when you're looking for covering a funeral cost, that is what we call a permanent need. Okay. A permanent need is something that's not going to go away, most likely during your lifetime. So at some point we're all going to pass away. No one's getting out of here alive, right? But we just never know when that is. So the last thing that, you want to do is purchase a life insurance policy that is designed to cover a temporary need for a permanent problem. Okay. And what I mean by that is, a lot of people kind of get confused when they hear these words like a term policy or accidental death, whole life, index universal life or guaranteed universal life. There's a lot of policies that are designed specifically for certain purposes. Life insurance is very flexible with the options that they have based on what you're trying to accomplish. Okay, so again, if we're focusing here on I do not want to be a burden to my family upon me passing, I want to protect my children, make sure my funeral is covered. Okay, your final expenses, my funeral and whatever it takes to get me there is covered. It's a permanent need. Okay. So when we're looking at generally working with individuals on a fixed income, okay, when you're looking for this type of policy, you want what's called a whole life. All right. And the reason why you want a whole life is a few reasons. Number one, what's nice about a whole life policy, it's the only policy or one of the only policies that you could purchase that will be there for exactly what the way it says. It's your whole life. It doesn't matter with these plans, if you pass right after the fact of you purchasing it, or at an age 98 or 100, or some of them even go to 105, 115, which is crazy. But you want what's called a true permanent policy. Okay. And what I mean by permanent is it's not going to go away at age 80, or it's not going to go away after 20 years, or it's not going to start adjusting premiums on you 20 years from now. With these term policies and these carriers or agents that sell, these temporary need products to seniors or retirees, it's crazy because generally these term policies have about a 10% chance of ever paying out its benefit. And what they hope is that you purchase one of these plans and you stay in it for the entire time, the 10 years to 20 years. And they hope that you don't pass away during that period of time, number one. Number two, the second thing they hope is that you get old and you get sick, but not sick enough to die anytime soon. Okay. And what I mean by that is you just may be disqualified from finding another type of policy when that term policy that you're in is about to term out. Okay. So what ends up happening is you get a letter from the insurance company 19 years from now saying, thank you for being such a loyal client. You haven't died. You paid your payments every month on time. And here's what's going to happen. A year from now, your policy is going to be up and you have two choices or a couple choices. Number one is you can keep the policy, but your premium payment is going to be about 200% more than it is now. And every year that you keep that policy and you keep getting older and older and older, that premium is going to go up by another 200%, 200%. And so what generally happens with that particular type of person is, they know that they can't go anywhere else because they either are too old, it's going to cost them too much, or they just won't health qualify. And so now they say, look, I paid into this policy that I've had now for 19 years. I can't just let it go. And unfortunately, what they do is they may hang in there for a year or so. I've had clients where they're shopping for another policy, or while they're they're shopping. Policy terms out, they keep it in force, and they just pay that higher premium. They keep paying that higher premium until the next year. Okay. The next year, premium goes up again. Now this person is getting to the point on their fixed income that they just simply can't afford it. So what generally happens there, or from that point, is that they will then start reducing that death benefit. So now they'll take that $100,000 policy and say, what will it cost for $75,000 to keep this in force for another year? What will it cost at $50,000, $25,000? And eventually they'll get down to a point where it just doesn't make sense for them to keep it, which is what the insurance company wants. So generally they want you to pay on it until it terms out. When you're looking at a term policy, it's going to, they hope that you never need it, they hope that you basically get to a point where you're too old or too, maybe your health doesn't qualify you to get out of the policy, and that you still know you need that death benefit. So you'll hang on for an extra couple of years until you drop it. And most likely, most people end up dropping these policies and never passing away. Okay, so the insurance company wins. So that's why I don't recommend those type of plans for someone maybe 50 and older. Okay. So that's one of the things. Another policy that I run into all the time where people have to be very careful is these accidental death benefit or accidental policies. So, a lot of times credit card companies, banks will entice you to open an account with them by offering you life insurance. Okay. And generally that life insurance is just a accidental death benefit. And what that means to you is, you have to generally pass away or die what I kind of call on impact in an accident. For instance, if you got into a bad car accident, you didn't die on impact, and on the way to the hospital, you had a heart attack in the ambulance and passed away, that insurance policy is not going to pay. Okay. That insurance policy would have paid if you got dead on impact, but when the records say, look, the death certificate states that this person passed away of a heart attack, that insurance plan is not paying. So if you don't really understand what the benefits are that you may have, or another key to, a tip to seeing that this may be something that's not right is, when you're paying $8 a month for $100,000 worth of a death benefit, generally there's something wrong there. And most of the time it's just a accidental policy, which these insurance companies love you to buy. You forget about them. That $8 just keeps coming out of your bank account every single month, or coming out of your credit card or whatever it is. Every single month you're just making payments, and there's millions of people that are doing the same thing, and none of them are dying in accidents, and these insurance companies are killing it. Okay. So getting back to what you want when you're looking to cover this need, especially on a fixed income, you want a whole life policy. Whole life policy goes forever. Okay. The premiums are determined in the beginning based on your age, your gender, and your health. Okay, so the younger that you are, the lower your premiums would be. And again, these premiums, what's nice about these is once they're set and that policy is issued and approved, they can't change that premium on you. No matter how old or how sick you get, they can't take this policy from you as long as you keep making premium payments, and they can't adjust what you're paying for it. Okay. Some of the other nice benefits about a whole life policy, they build cash value. So there's something in it that's growing. So maybe over time, you'll see that there may be a little bit of a benefit with inside of your life insurance policy that if you did have a bad month, you may be able to utilize some of that cash value to make your premium payment that month. Or if something changed in your life and you decided down the road you wanted to drop this policy, there may be some money that you can get back. So there's something in it where that there is nothing of value with inside of a term policy or an accidental death. Okay. Now, the other thing that you want to look for is, if your health allows you to purchase it, you want first aid coverage. A lot of these policies that you'll either call in on an 800 number because you saw a TV commercial, or you get a pamphlet in the mail that says, look, answer no to these 3 questions and we're giving you a life insurance policy, or fog this mirror and you got approved. Almost 99% of those policies will be what's called a graded benefit, or it will be a 2-year wait, to keep it in simple terms, a 2-year wait before your family will maximize the death benefit that you purchased, that you have to get through. Okay. So generally what will happen is, with these 2-year period of time plans, if you pass away in the first year, they'll always give you back what you paid into it. Okay, so they'll never keep your money. And number two, there may be some kind of bonus to it. So they may say, okay, in the first 2 years here, if you pass away, we'll give you all the premium that you paid into it, and then we'll also give you a 10% bonus. Okay, you make it into the third year, that death benefit is in force at the full amount. All right. So if you had a $10,000 policy, you know, your family may have gotten some money back premium wise. They wouldn't get the $10,000 in the first 2 years until that third year comes. Then if you passed away naturally, you'll have that death benefit there. Okay. Sometimes we can't get around that 2-year graded period when we're dealing with someone that had some past health issues, COPD, oxygen, those sorts of things. You know, a lot of times there's no way around the 2-year graded period. So if you do have to get a graded benefit because you can't health qualify for first day coverage, you know, look into some of these plans that, yeah, they may pay out that death benefit, or they may pay out or pay back the premiums over the first 2 years if you died naturally or in your sleep. But some of the better policies will pay out that full death benefit during those first 2 years if you pass away in an accident. Okay, so if it's an accident, even though you had a 2-year period of time, generally some of the better policies out there will pay out a lump sum death benefit of the amount that you purchased from the start. So, you know, some of the other things that you want to look for, you want to look for a company that is harder to get. Some of these plans do more underwriting, and the more underwriting that they do, if you're very healthy, the less you'll pay for premiums. And again, you're going to be paying premiums on this thing until you die, which could be a long time. So you generally want a good rated company that's been around for a long time. If your health allows first day coverage, you want a whole life insurance policy because the death benefit never changes. The premium never changes from the day you bought it. No matter how old or how sick that you become, they can never take it from you. Okay. So if you want to learn what your options may be, or you want to see if you may qualify for some first day coverage, give me a call. I work with pretty much all the top carriers that are out there right now that offer these types of policies, and I'm pretty good at what I do. My phone number direct is 203-528-1214. Good luck and take care. Thanks. Bye-bye.